Hey, folks, welcome to Verified Investing Trade Setups in Action video. My name is Gareth Soloway, Master Trader and Chief Market Strategist here at InTheMoneyStocks.com. Today's date is Monday, February 3rd, 2020. So let's talk about the S&P 500. Obviously, my cycle triggered just a week ago from Friday. You could clearly see it right here. The reason why it triggered was very simple. First off, going back 2 months ago, I had told my members here in Verified Investing Alerts to watch for this cycle. I said between January 15th and January 31st, there was a major indicator that a major cycle would trigger. And you can go back and ask any of our members here. They'll tell you, if you're a member, you can go back and you heard it in my videos literally late November and early December, all the way through January, talking about this. As we got into the cycle, what's interesting is that just at the midpoint of that cycle happened to be the exact cycle. So I had a cycle date range, and literally the midpoint right here was that point. It triggered. Now, what did it have to do to trigger? I told my members literally 2 months ago, you need to see 80 million in volume on the spiders. That was a calculated amount of volume that to me would signal that it wasn't just small investors selling, that it was institutional selling, and you needed to see a sell on the S&P of 20 plus points off the highs or down for the day. In this case, we actually gapped up and we had more than a 20-point sell on the S&P. In any case, the cycle triggered. We continue to trade down. We are getting a bounce today. Interestingly enough, the bounce is getting minimized. If I go to my intraday chart here real quick, you can see we had this early gap up and push to the upside, and then the markets have faded. Now, it'll be interesting to see where we go into the end of the day. I want to talk a little bit about this early run in the markets because a lot of people were amazed at how much upside we saw early in the day, because we actually came to a point where we weren't that far away from negating the major down move from Friday. I mean, here was Thursday's close, and we got here. There's still a little distance there, but it was a tremendous move to the upside. Now, why on earth did we get that surge at the open for the first hour of trading? The answer is very simple here, folks. You have this inherent buy the dip mentality from investors. Okay. In addition, today is the first Monday of the new month, right? So, think about this. Friday was the 31st of the month of January. Today is the first trading day of the new month. Money moves into the market on the first day of the month, whether it's a reallocation of 401k money going into the market. People just naturally are putting their money into their funds on the first trading day of the month, because this ingrained buy the dip mentality is so key in the market and so strong. Even with what's going on, people are still saying, oh, this is just a dip, buy the dip, buy the dip. We've had that ingrained in our market. What that it tells you here is that basically we opened here, and amateurs or smaller investors, they just bought the market up, 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 up. Now, once that kind of buying gets kind of exhausted because a majority of the money is in, what does the market do? The institutions like David Tepper sell the market and bring it back in a little bit. All right. Now, the volume's not huge today by any stretch, but what's interesting is that, I noted this on Friday, how every little small bounce was getting sold. I mean, here you had a bounce, got sold into. Here, bounce, sold. Here, and this is Friday's action, by the way, the big down day on Friday. And I noted on Twitter, on my Twitter feed, I said, David Tepper must have gotten off his horse and be selling here. And if you remember, just a couple weeks ago, David Tepper was saying, "Hey, this is a great market. I'm long the market and I'm riding this like a horse, and etc." Well, guess what? The selling pressure was heavy volume and just continual. He must have been unloading. He talked to Jim Cramer this morning and basically said, "Yeah." I mean, he didn't say specifically, because my guess is he's not fully out of his positions yet, but he basically said, "Yeah, we're basically unloading." So that's my guess, is the downside's not over. The cycle again does not end like this. So just be aware of that and expect further downside in this market. Yes, it's a nice little bounce today, but remember, when you start a down cycle, there's still a lot of bullish mentality investors out there, especially small investors that are looking for a pullback to buy. And that's why in the beginning of bear cycles off all-time highs, you're going to get big bounces. We saw it in all fairness last Tuesday, right? So here was last Monday's big drop. Tuesday we had this huge bounce. By Friday we were at new lows, right? Same thing today. Friday the big drop. Monday today big bounce. Now it's already starting to fade. I'm curious where we go towards the end of this this day, and then obviously in the rest of the week. Interesting on Apple. Apple was down as much as 7. We actually day traded Apple off a great level today, but this has bounced. Apple has bounced nicely, but Apple should go lower. They closed all their stores in China. My guess is they're not. They said they're closing them until February 9th. My guess is it will be a lot longer than that because the coronavirus isn't going away that quickly. I mean, the numbers are literally jumping by thousands a day of infected. And literally we're a week away from the 9th, 6 days in fact, when supposedly they're going to reopen. It's not going to be done by then. I mean, there's no way. It's only accelerating right now. Maybe it's slowing down, but they're not going to risk opening those stores. So you're going to have, you know, you're going to have a key here in understanding that Apple likely will keep those stores closed. There should be continued price downside on Apple. And lastly, I'll leave you with is a downside target on Apple. I have a Fibonacci retrace. I'm really looking for 290 in the short term, but I think this ultimately probably trades down all the way to this point here. This is a 50% retrace on Apple, and that's down to 230. And I think before this cycle is done fully, which will be, I have at least mapped out to the second quarter of this year, maybe even longer. I think you'll see $230, $35 on Apple. All right. In any case, I just wanted to give you guys that little insight on why the markets, again, had that early pop and then are fading now. And I think that's really intriguing to understand the first of the month impact during a kind of a euphoric phase in the market where money rushes in on that first trading day of the month because more people can put money in their 401ks and so forth. It creates that upside quickly, and then it usually fades, especially now that we've entered this bear cycle. Have a great one, guys. Take care.